Yeah, good evening. It's Jim from JAGfx.com. It is Thursday, the 29th of August, 2024. This is just a video to clarify, to rectify a mistake I made on a previous video about my multi-sequence hedging trading strategy. All right, so we've got a dedicated Telegram group. I can put the link in the description of the video. I'll just bring it up. JAGfx hedging. So there's a dedicated group here, 143 members. So everyone's more than welcome to join that. I'll put the link to that. Just doing purely hedging in there. Hedging, all hedging means is the traditional way of trading is by placing a trade and placing a stop and possibly a profit target. Hedging, you're not placing a stop. You're relying on if you get an opposite signal, then you basically take an opposite trade signal and hedge your trade. But we'll go into a couple of examples and we'll just go through them and I'll show you how the system works. So I'll bring up my something. I've got XM, this is MT4, this is a live chart, but I haven't got any cash in this one. I've transferred all the MT5, but I use my soft Forex simulator. So that's what you see here. It's a simulator setup. There'll be a link to that in the chart, all right? So we're looking at the pound USD Daily. This is back in, you can see the date up here, 11th of Jan 2018. You see it down here, it's close to it. So I'm just going to show you what the mistake was I made in the previous video. It's a bit of a rookie error and I'm a bit embarrassed by it, but I picked it up the other day when I was looking at something and thinking, oh, that doesn't make sense, but we're going to rectify that and we're going to get on with it and show you what I mean. All right, now I'm going to clarify the mistake first before I get into explaining so for example, we're using the same indicators I use in all my trading. So we've got the MACD Platinum, the QMP filter dots, and all this is you could either call it the central band in a Bollinger Band setup or a 20 SMA moving average. It's the same thing. So this templates use the Bollinger Bands. Here's the setup for the Bollinger Band inputs. So it's 20, 0, 2. So the band's period's at 20. So that gives you the central band. Band's deviations 2.0. That's not a normal default setting on the Bollinger Bands. If you put a 20 simple moving average on the chart, it'd be on top of that line. So it's same. All right, now this here is a valid sell signal. Now I know I've already just gone back in time a little bit, so you'll see the dots reappear a little bit early. I just want to show you, fix up that mistake straight from the get-go. So for example, we take a sell here. So we'll go over to the trade window. I'm going to take a sell here. It's a valid sell signal. The MACD Platinum is above the 0 level. There's a bit of divergence there. We'll take the sell. So next bar is a sell. Sorry, not next bar, we'll take the sell. So I've taken a sell there. Now I'll bring up my trade box. This just shows the open trades. Now if you're interested, I started with a $10,000 account. Here's the equity down here. Here's a floating profit and loss minus 66 cents, which is the same as up here. Put this box over here out of the way so you can just watch the trades. I know it's coming up because I set this up, so right, we know, right, there's a buy. Now, we take the buy here because we're hedging. Now, with the multi-sequence hedging, with the traditional way hedging, I would just take a buy and if the market just shot up, there's no chance of getting out at all. All I've been doing is locking in a loss between that sell and that buy, which in this case is, as you can see on the minus $46 roughly. So the total of these two trades here. So we've got the sell for 0.02 and the buy for 0.02. Now with the multi-sequence hedging, this is considered sequence 1. So I could set these comments up here if I wanted to. So this would be S1. S1 just means sequence 1. So it's sequence 1. Actually, I don't know if I can modify it. I'll modify this one. So this is S1. No, S, Jim. S1, and it's hedge 1. So that's what this symbols I use. So the first one should be S1T1, trade one. Now, because I've got a new buy here, it's not a valid buy signal, so it's not a buy signal I would take if I hadn't taken the sell, but because I've taken the sell, I've not only hedged, I want to commence a new sequence. So I'll also commence a new sequence. I'll take another buy. So there it is there, second buy, and this is sequence 2. So that's what's called multi-sequence, trade 1. Now, what my mistake was in the previous video, I was saying, I'll just move this box out of the way a bit. Bring up my crosshairs, maybe. All right. Now, what I was saying in the previous video, we'll look at the loss between here and the entry for the sell. So it's approximately 200 pips. It's 197.4 pips. Say 200 pips. Now, what I was saying in the previous video, because we've got 2 buy trades on and double the size of the sell trade, instead of moving to overall break even for all 3 trades, you'd only have to move 100 pips, so half of that loss there, which is incorrect. It has to actually move the entire loss. I forgot that the sell would still be losing when it goes up. So what I was saying in the previous video was that loss there between the buy and the sell is 200 pips. I was saying price only had to move up another 100 pips and I'd be an overall break even for all trades, which is not the case. So we'll just run through it. Has to move up the whole loss, which is 200 pips. So, and you can see now its price has gone up, and that, I think, let's have a look how many pips that is. So that's moved up 60 pips, and we're still nowhere close to break even. So we'll go up again, another bar, not going far at all. Right, popped up. It's pretty hard to do this because you've got these spikes, so, but we're still not at break even. So look, these are 2 trades here. There's the sell. We're still losing on the sell, obviously, but we've got double the size on the buys. So let's go again. All right, now let's have a look. Now we've got 31.98, say 32, 32, 64. We're still down 78 roughly. And let's see how many pips we've gone up. So from the last buy, so we've gone up 160 pips, give or take, and we still haven't broke even yet. So we have to go up that 200 pips. So what I said before in the original video was we only had to go up, recover to go in a full overall break even for all 3 trades. We only had to go up 100 pips, half the initial loss, whereas in fact it's the full loss, which is 200 pips. So we'll just keep on going. And there we go. There's 50, 50. So there's 100 and minus 97 roughly. So that's about, you'll find that that's pretty close to 200 pips. So my mistake on calling that in the previous video, and I think I probably called it a few times, you'll probably find that's close to 200 pips, 248. Just make sure that loss was 200. Oh yeah, it was about, the loss was about 230 roughly. And that's just about 240, 245. So that's covered the loss. So that shows you what that means, all right? So now we can just close all trades at break even. Now the reason I probably look at closing all trades is because my initial trade was this sell. The MACD platinum was above the 0 level, ended up with a hedge buy, and it's gone up, and we're in overall break even. Now, if it shot through completely, I could probably get a bit tricky and close, do partial closes, etc., and put a stop in place. But in this case, the smart thing to do is just get out of overall break even. So we'll bring up the trade box again, and it'll go over there. Of course it does. So we just close all those trades. Now we'll just run through what a couple of sessions. So close all. I'll just pause the video and I'll set something up here. All right, we'll continue. I'll just fast forward a little bit. We've got this new sell signal. MACD platinum's above the 0 level. I'm in sell mode, long way above the 20. So we'll take the sell. Hopefully we'll get a few sequences here going. All right, my trade management on this, there's 2 things I'm looking for. The first thing is if I take the trade, like the sell trade, and prices are closed above the moving average 20, once it closes below that, confirm close, that's one way of looking at sub-trade management. The other way is the MACD Platinum, the orange brownie line through the zero level. So we'll just keep on going. So there we've got a close there. So we could close half and move the stop, but I want to keep on going. All right, we're going down. What I'm going to do is I'm going to tighten that up a bit. We'll just close that trade because close last. It's all right. Right, coming up to a buy. Right, there's a buy. Now, price is closed on the other side of the... See, I knew it would happen. Price is closed on the other side of the moving average 20. It's no big deal. MACD Platinum is below the zero level, so we can take the buy. It's just I lose my trade management tool of that moving average 20, but we'll take the buy. I'm trying to get it in a bit of trouble here, and here we go, hopefully. Come on, let's go. So we still got that buy happening. All right, here we go. This is good. This is good. Just make that a bit smaller so you can tighten it up a bit. Now we've got a hedge sell. So this one here is sequence 1, trade 1. And we're going to take a sell. So that's sequence 1, hedge 1. And we're going to start a new sequence, even though it's not a valid sell signal. We're going to commence a new sequence. Same size, they're all the same size at the moment. And that'll be sequence 2, trade 1. So when you see them in all my spreadsheets, etc., that's what you're looking at. So now keep an eye on these numbers here. Keep an eye on this number here, floating profit loss. So we'll just keep on going. See what happens here. I want to. All right, this is good. This is good. Right, we've got a new buy. MACD Platinum still below the zero level. So for sequence 1, this is trade 2. So that's 0.6. We increase the position size. So that's sequence 1. I know it gets a little bit confusing. You keep notes, you keep a spreadsheet. It makes life a lot easier. So sequence 1, trade 2. Now sequence 2 was this sell. So that's a hedge for sequence 2. So we go back to the 2 level. So it's a buy, and that is a what did I say? A sequence 2 hedge 1. And because we've got a new signal, it's also the start of a new sequence. This is good. This is good. So it's another buy, and that is sequence 3 trade 1. Now just stand by. I'll set something up. All right, I just paused the video to set up my multi-trade worksheet. Now, if you can remember, we've got, hang on a sec, we've got 3 sequences going. Why can't I move that? There we go. We've got sequence 1, sequence 2, sequence 3. So we've got trade 1, hedge 1, and trade 2 of sequence 1. And we've got sequence 2, trade 1, and sequence 2, hedge 1, and sequence 3, trade 1. It's a little bit confusing, but this is all, these notes are put on the chart and also come to this multi-trade spreadsheet, and this is the same input figures. So here's my first sequence, buy, sell, buy. So there, and that gives me a overall break even for that sequence there, 1.40033. And we're net 0.06 long. So you'll wonder why there's big gaps there. I just leave big gaps because I like to leave room for further trades. Here's sequence 2, a sell and a buy. And here's sequence 3 down here. Now sequence 3 also gives me an overall. So the overall's 1.4 overall break even, 1.0077. And that's plus 0.08. Now if we go back up, the sequence 1 break evens 1.400. I'm writing this down as and that's plus 0.06. So it's giving me 2 break even levels basically. So we'll just tuck that aside. So We'll close the trade box for a second. Let's have a look. Let's draw a line, see if we can get it. I haven't cherry picked this, so I'm looking for the horizontal line. So we'll go for, just change that. Hang on, pause the video a sec. All right, I just pause the video while I mark that line up. This yellow dashed line is overall break even, 1.40077. So to close all trades in overall break even, we've got to go up there. Now, with the MACD below the zero level, ideally I want to try and get it up to the zero level. So no real rush to close the trades yet. Let's move on. As I said, I've got no idea what's coming up. I haven't planned this or anything. I'm just trying to wing it to show you, just to give you this multiple sequence look. All right, and you can keep an eye on these numbers here. We're all red at the moment, and we're minus just under $100. So this is a $10,000 account. So I've got no idea what's coming up. You can we're starting to see a bit of green there. Hopefully it'll pop up or pop down, which is good. Right, it's popping up. Look at the MACD platinum down there. Now we're down only about $40. You can see a bit of green starting to get positive as we head up towards the overall break even. MACD platinum still below the zero level. Oh, you know, there we go. All right. Now, we could probably go one more candle here. The reason I say that is the MACD platinum is not through the zero level yet with the red line. Remember, we're looking at the close of the current candle. So we're on the open of the new candle now. We're at overall, look, we're at $10.82, overall break even. We could close that and be done with. And that's possibly a smart thing to do, but we started with a buy. So we can go one more candle. And it went the wrong way. So we could have closed. Let's just go up there. All right, there we go. All right, we got $103.90. Now, what you'd be doing here, this is what I'd be doing. I would close all sequence 1 trades, all sequence 2 trades, and partial close of sequence 3 trade 1 and put a stop in place. So just be close, 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 close part. So I'm closing half, close. The entry's down here. Generally, I like to keep my stop below the yellow 20 moving average. So let's set the stop. I'll do a visual. So I just drag it. I can just drag it with the visual. So I'll put the stop there. Can't lose. So there we go. We can't lose. We've got sequence 3, trade 1's the only trade left. Still got $24 there. We've closed in profit. Went way through the break-even level. So that's no longer valid. Delete. So let's just keep on going. How long are we? 18 minutes in this video. Now the MACD is above the zero level. There's a sell. So what we can do, what I would be doing is I'd be adjusting the stop. So it's just a matter of dragging it up just a little bit, just keep it underneath that 20 moving average, locking a little bit more profit. And I'll be taking a sell. I don't know what that box keeps on moving over there. There's a nice double high resistance level and price, or a double top. Yeah, so let's take the sell. So now this would be, I just go back to sequence 1, trade 1, just to start the sequences again. Just as long as we keep them numbered that we know, track them on the spreadsheet. Next bar, so we're going down. All right, we're closed on the other side of the 20 moving average. MACD platinum's close to zero level. Again, we're just closing half, so close part. And close, and we're setting a stop. So not stopped out on the buy yet. The sell will set the stop. Again, we'll just a visual move. I'll just put it above this little high here. So Can't lose. Trying to look for a sequence. So I'm just going to fast forward and see if I can find a set of sequences. All right, no need to take that buy. We're stopped out on the sell. We're still in this partial buy. You could probably drag the stop up if you want, but this buy is not valid, so we're not taking that. I don't think it's valid, no. Yeah, you just drag that stop up. So we'll take this. I'm not going to go into it because you don't have to. I'll just leave it where it is. Take the sell because there's a valid signal, MACD platinum above the zero level. I'm looking to close below, close half. All right, I'm trying to look for a sequence of, right, we'll close those trades. Let's see if I can find a sequence of, all right, MACD platinum below the zero level, got a blue dot on the MACD. So we're getting ready to buy. All right, there's your buy. Let's just close this one so there's no confusion. No need to have that sell on. All right, here's the buy. We'll take the buy. I'm looking for a sequence of sequences. There we go. All right, sell. Right, we're taking a buy. That's sequence one, trade one. Now we've got a new sell signal, so we take the hedge. So it's a hedge. Sequence one, hedge one, and we commence a new sequence. I know it's not a valid sell signal, but we take it anyway because price could just keep, look, it's a downtrend. Price could just keep on dropping down. If we're doing the traditional way of hedging, I would wait for a new buy signal, and this could drop down 1,000 pips. You know, so it could be a long time with margin tied up, etc. So I'm taking a new sell, same position size. That's sequence two, trade one. All right, now keep an eye on these three numbers here and the overall floating profit loss down here. We'll see if we can get positive. If it goes down, start to see a bit of green there, start to see a bit of turn. Next bar. All right, good. This is what I want. Multiple sequences. All right, we've got a new buy. MACD platinum still below the zero level. There's regular bullish divergence there. You just see by eyeballing it. So, first up, sequence one, trade two. So it's a bigger position size. So we buy. Sequence one, trade two. And we go back to the original position. So sequence two is a hedge. Sequence two, hedge one. Buy. Next one, new sequence. Sequence three is a buy. So sequence three, trade one. See? Then you would go back to your multi-screen, what do you call it? You know what I mean. This thing. Wherever it is. Oh, come on. That one. Fill in that. Get ready. Get your break even sorted. Don't need to do it now because I'm trying to rip through this. So keep an eye on all these numbers here, especially this number down here, the floating profit loss. Hopefully it goes down. All right. Minus $26.40, minus 30. All right. We're positive. 24.08. MACD platinum's through the zero level, close to it. We go one more candle, see if we can get a bit of profit. Doesn't take much, it just goes to go a bit higher and we've got plenty more profit. You can see up here what's happening. $47. We're closed on the other side there, made 20. MACD platinum through the zero level. Again, $47. You can close all sequence one, all sequence two, and half of sequence three, put a stop in place just below this low or something like that. We'll close them all and we'll just quickly look for another, see if we can find another good example. And look, you see price didn't really go up. Red dot on the MACD platinum above the zero level, we're in sell mode. And there's your sell. Let's go for a sell. So there's sequence one, trade one. It might just be a winner straight from the get-go. Hopefully not. All right. Sequence one, trade one. So here we go. This is what I just do. Just pick these trades. Even if you get stopped out, there'll be another trade soon. So now we've got a buy, so it's a hedge buy, and so sequence 1. Hedge 1, and another buy, so that's right. Sequence 2, trade 1. So you get the idea, it's multi-sequence, getting away from just the one sequence. Next bar. Yeah, good. All right, another sell. MACD pattern above the 0 level. So sequence 1 is the trade 2. Sequence 1, trade 2, sell. Sequence 2 is a hedge. 3, hedge, sell. Sequence 2 is a hedge. Sequence 2, trade, hedge 1. Sequence 2, hedge 1. And one more sell. Commenced a new sequence, I think. Yep, sequence 3, trade 1. Yeah. Just checking them. Normally I've got lines drawn on the chart, so it helps me, but right, again, let's have a look at these numbers down here. 42 minus, and you can see all the red and greens up there. All right, let's keep on going. See if it drops down or it goes. Right, minus 1250, didn't go far, and we're already in the profit. Right, bounced straight up. Let's see if we, all right, here we go. We're getting multiple sequences. This is good. Right, now what do we do? Sell, buy, sell, buy. So sequence 1. This is where it gets a little bit tricky. It's a buy. So it's hedge 2. That is sequence 1, hedge 2. Sequence 2, that's trade 2. So that's 0.062. So sequence 2, trade 2. Accept. Now, sequence 3, where are we in sequence 3? Trade 1, hedge 1. So it's buy for 0. Oops, messed that up, didn't I? No, I got rid of that one. It should be 2, not 3. All right, buy. I'll try again. What I'll say, sequence 3, hedge 1. And it's because it's a new dot, it's also one more buy. Sequence 4, trade 1. Now this is why you need notes, lines on the charts, the multi-trade spreadsheet filled out, because this gets really confusing. Now you've got an overall break even. You'll have a break even on sequence 2. Sequence 1's hedge. Sequence 3's hedge. Sequence 4's got one trade. Your brain's probably spinning right now. Fair enough. Let's make this a little bit bigger. I'll just drag this box up so we can see it. All right. Let's see if we can get out of this one. Next bar. So we're minus 120 all up. And here's a lot of red up there. Next bar. Going up. Already down. We cut the loss a bit. Not sure how far it gone up. All right. I'm down to minus 1622. Now, you've already made some profit. We're 10,293 in equity. If you wanted to, and this is like a gap opening by looks, this is probably after a weekend. If you wanted to, you could just close all these trades out, take the $16.22 loss and be happy because we're on the wrong side of the MACD Platinum and price has already broken through the 20 and we've got this gap here. But we'll try and, so just keep in mind I said that. I'll take one more candle and see we're down. So we're going popping up again, see if we can pop up, down. So the smart thing would have been to take that small loss because you've got to build a buffer up, but we'll keep on going. We'll see what happens here. Red dot on the MACD Platinum, not good. Price, all right. All right, what do we got here? We've got another sell. Now, just bear with me. I'm going to pause the video because I'm going to do all these orders and I'll explain them to you. I just don't want the video to drag on too long. All right, I just paused the video as well. I filled out all the orders to save some time. All right, here's the orders from number 32, 33, 34, 35. So we've got 1, 2, 3, 4, 5. So sequence 1 is 0.1. At sequence 1, trade 3. So now we've got a break even on that. Sequence 2 is hedge 2, so that's hedged. Sequence 3 is trade 2, 0.06. So that's got a break even on that. Sequence 4, it's hedged. So it's hedge 1. And we've got a new sequence 5, trade 1. There's a lot of orders here. Looks like a lot of trades, but you've got to remember we're buying and selling, so we'll see how we go. Keep an eye on this number down here. It's minus 180. And watch this up here. Hopefully this will drop down. I've got no idea. I should have planned this a bit better. Already 104, so we already cut out about $76. Right, minus $1.42. The trend is down. Yeah, have a look at that trend. The trend's down. You want to go another candle or do you want to close out again? Smart thing, MACD Platinum is just still above the 0 level, so we'll go one more candle. And look at that. See what happens? If you get greedy, that's what happens. Minus 228, just reversed in a heartbeat. But having said that, I'll just go back, all right? We'll just go back to the previous bar. I want to show you something here. Now, it's minus 142 when it closed. Now, we can assume with this spike down here, I'll just make that a little bit bigger so you can see it. All right. Bring up the crosshairs, hopefully. That's pain, haven't they? Right. So we're minus 142 on the close of this candle here. Now, that candle is dropped down another another 60 pips roughly, or 50, say 50 pips. So that wick on that candle is 50 pips. So you would have been overall break even there. But we'll give it a go. So you could have got out any time. I'm not trying to, so we've gone against it, which we know. Is it coming down? Another buy. So we can go back into it and take another buy. I'm not going to put them all on the trade things. There's twice we could have got out, at once for a small loss and once at break even quite easily. But we'll just keep on going and we'll, assuming we take buys here, see if it shoots up, another sell. I'll just keep on fast forward. Here's another sell. Now, we've got to see it move one direction. All right, I just about guarantee you'd be out of all trades on that move down. I can just guarantee you now. If you weren't already, you are out. Or even look, just leave them without taking any trades. So this video's gone on long enough, but you get the idea what the multiple sequences are. Join that Telegram channel. Follow my trades. I've got spreadsheets now. I'll see if I can bring that spreadsheet up. Fox Sports. So here's the one for the current one for the 4-hour charts. It's got all the different, look, I'm in a pound CAD sequence, multiple sequences on up to trade 4 on sequence 1. But in the meantime, I've closed, like this was sequence 2 on the pound CAD. This was sequence 3 in the pound CAD's closed. Sequence 4 was closed. Sequence 5 was closed. And we've still got sequence 6 and sequence 7. This is my, I'm trying to pass a prop challenge, which I'm calling in the group. And we're heading in the right direction. It's pretty slow going, but that's on the 4-hour chart. So which is not the ideal time frame. I prefer the daily. So we've got that. Come in the groups. There's a, yeah. All right, boys and girls, I've probably taken up enough of your time. Hopefully that clarified that mistake I made with regards to having to recover trades when you take a initial buy or sell trade followed by a hedge and a second trade in that same trade direction. Hopefully I haven't confused you too much. Thanks for watching, and if you do like the video, hit the like button, hit the subscribe button. It's always appreciated. Thank you.